everyone, and welcome to the April edition of the monthly ESG News Bulletin. I'm Eric Kane, the Director of ESG Research for Bloomberg Intelligence, and for this month's bulletin, we'll highlight three key items. First, the ongoing battle around the SEC climate disclosure rule. Second, a record-breaking first quarter for green bond issuance. And third, a major shift in the SBTi's guidance that could have huge implications for the carbon offset market. In April, implementation of the much talked about SEC climate disclosure rule was paused by the SEC due to ongoing litigation. As a reminder, the rule was announced in March and would require the disclosure of climate risks and decarbonization efforts by 2025. And Scope 1 and 2 emissions by 2026. Disclosure would only be required if a filer determined it to be material. Notably, Scope 3 emissions were excluded and smaller companies considered to be exempt. While many ESG proponents felt that the rule was watered down to make it more defensible, it faces significant legal challenges from those who think the SEC action is unconstitutional, including the Chamber of Commerce. While examples of the pushback to ESG such as this continue, we saw record issuance in the global green bond market in the first quarter of 2024, amounting to more than $200 billion. Green bonds represented 60% of total bond issuance for the quarter, while social bonds had the second highest issuance. Sustainability-linked debt continued to fall from the highs of 2020 and 2021 due to investor scrutiny surrounding the associated performance indicators. At BIESG, we consider sustainable debt issuance to be one of the key metrics that can demonstrate the size and health of the ESG market. Finally, in April, we saw considerable and ongoing controversy surrounding the Science-Based Target Initiative, or SBTi's, apparent decision to allow wider use of offsets for Scope 3 emissions. This reverses long-standing policy that requires companies to reduce the overwhelming majority of value chain emissions without using offsets. While the SBTi responded by saying that no changes have officially been made, any changes would be informed by evidence. This potential reversal could provide a significant boost to the development of a high-quality voluntary carbon offset market and cause companies and investors to reconsider their approaches to achieving net zero. More data and research related to these topics and much more can of course be found on Terminal by going to BI/ESG Go. Please stay tuned for next month's bulletin and we'll see you then. Thank you very much.